Hey guys, welcome back to another episode. In this video we will be going through our very simple yet profitable, the best support resistance indicator and trading strategy. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. And don't forget to share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. The concepts of trading level support and resistance are undoubtedly two of the most highly discussed attributes of technical analysis. Part of analyzing chart patterns, these terms are used by big traders and institutional traders to refer to price levels on charts that tend to act as barriers, preventing the price of an asset from getting pushed in a certain direction. The best trades usually happen around support and resistance. No matter how you see the chart, it will be obvious. Most big traders and institutional traders love to use support and resistance as a trading strategy. But otherwise, most novice traders often lack a clear method for taking advantage of price action support and resistance. So in this video, I will show you how to build a systematic trading approach using support and resistance. So, what exactly is support and resistance? Is support and resistance strategy among the best strategy when trading stocks, forex, and cryptos? Support and resistance, unlike the vast majority of technical analysis, are the most provable and reliable concepts. Support and resistance levels, or support and resistance zones as they're often called in price action books, are basically areas in the market where the price has a high probability of reversing and moving in the opposite direction. They are drawn on the chart using horizontal rectangles and are found by looking for the times when multiple reversals occurred from similar points to one another. These areas serve as valuable markers that are fundamental in identifying entry, exit, stop loss, profit-taking levels, and risk-to-reward ratios. Support level definition and examples. First, the support level represents a price point that an asset struggles to fall below over a given time period. Think of support as the floor, the area where the price has difficulty falling below. This is where buyers are expected to step into a falling trend, causing the downward trend to pause as demand increases. Second, applying trend lines or incorporating moving averages provides a more dynamic view of support. In theory, support is the price level at which demand or buying power is strong enough to prevent the price from declining further. The rationale is that, as the price gets closer and closer to support and becomes cheaper in the process, buyers see a better deal and are more likely to buy. Sellers become less likely to sell since they are getting a worse deal. In that scenario, demand or buyers will overcome supply or sellers, and that will prohibit price from falling below support. Here are other examples of support level. Resistance level definition and examples. First, a resistance level represents a price point that an asset has had trouble exceeding in the time period being considered. Think of resistance as the ceiling, the area where the price has difficulty rising above. This is the area where sellers come into a rising trend, causing the upward trend to pause as supply increases. Second, applying trend lines to a chart can provide a more dynamic view of resistance. In theory, resistance is the price level at which supply or selling power is strong enough to prevent the price from rising further. The rationale behind this is that as the price gets closer and closer to resistance and becomes more expensive in the process, sellers are more likely to sell and buyers become less likely to buy. In that scenario, supplier-sellers will overcome demand or buyers, and that will prohibit price from going above resistance. Here are other examples of resistance level. And now, how to determine support and resistance levels. Although the steps sound easy enough, many traders struggle to find support and resistance zones in practice. If you are having difficulty, don't be discouraged. Identifying levels of support and resistance is a skill that is built up over time through lots of practice and analysis. There are thousands of ways to identify support and resistance levels on a chart. Some traders will use indicators, but we honestly prefer to draw them ourselves. By observing price action, you can learn to decipher what the market is showing you. Our method is simple yet effective and can be adapted to fit into any trading strategy. Step number 1. Start with a clean chart. Support and resistance are all about price action, nothing else. Remove distractions and simply focus on the price. Indicators have a tendency to cloud a trader's judgment. This is especially true where a trader has multiple indicators on one chart. A trader can easily convince themselves they are seeing things that are not necessarily there. When it comes to drawing lines of support and resistance, keep it simple and start with a clean chart. Step number 2. Identify all swing highs and lows. The first support and resistance indicators are swing highs and swing lows. Swing highs and swing lows are turning points in the market. These are areas that the market has already indicated there is more buying or selling pressure causing the market to turn. So, if the market were to revisit these areas again, there is always a chance that it could turn at those areas again. So, I want you to put a line at every top and low you see on your chart. The important thing here is to draw a simple line at all lows and highs. It shouldn't be very subjective. The powerful aspect of this step is that you will be able to easily determine whether the market is in a trend or not, since you will see the highs and lows. As you can see on this chart, the market isn't currently in a trend. Step number 3. Add areas to connect the highs or lows. The last step in drawing support and resistance zones consists of linking the highs and lows you identified with horizontal rectangles. Those will become your main support and resistance zones. There is almost no way that the zones you draw will lie exactly on all the highs and lows you identified. That is totally normal, be okay with it. Whenever you feel you can connect two highs or lows, add an horizontal rectangle. Once you have completed this process, you can be confident that the rectangles represent clear support and resistance zones. Step number 4. Simplify. Remove any areas that are not close to the current price. They will only confuse you. If the price does dramatically jump, you can always redraw your areas of support and resistance. But in the meantime, keep your focus on levels that are just a few pips away from current price, and pay even greater attention to levels that have shown strength or levels that have been tested 3 or more times. And now, how to trade support and resistance. One of the best uses of support and resistance is for defining entry and exit points for positions, coupled with efficient risk management settings. Now that you know all the basics, it's time to apply these basic but extremely useful technical tools in your trading. Because here, at Trader DNA, we want to make things easy to understand. We have divided how to trade support and resistance levels into two simple ideas: the bounce and the break. So now, how to trade based on support and resistance levels. Once you've determined support and resistance zones that you will keep an eye on, the next stage is to watch for signs that the level will either hold or fail. First, the bounce. As the name suggests, one method of trading support and resistance levels is right after the bounce. Many novice traders make the error of setting their orders directly on support and resistance levels, and then just waiting for their trade to materialize. Sure, this may work at times, but this kind of trading method assumes that a support or resistance level will hold without price actually getting there yet. You might be thinking, why don't I just set an entry order right on the line? That way, I am assured the best possible price. When playing the bounce, we want to tilt the odds in our favor and find some sort of confirmation that the support or resistance will hold. For example, instead of simply buying right off the bat, we want to wait for it to bounce first before entering. If you've been looking to go long, you want to wait for it to bounce off support before entering. And if you've been looking to go short, you want to wait for it to bounce off resistance before entering. By doing this, you avoid those moments where price moves fast and break through support and resistance levels. From experience, catching a falling knife when trading stocks and forex can get really bloody. Second, the break. In a perfect world, support and resistance levels would hold forever. In a perfect trading world, we could just jump in and out whenever price hits those major support and resistance levels and earn loads of money. The fact of the matter is that these levels break, and often. So, it's not enough to just play bounces. You should also know what to do whenever support and resistance levels give way. There are two ways to play breaks in trading: the aggressive way and the conservative way. The aggressive way or support and resistance breakout strategy. The simplest way to play breakouts is to buy or sell whenever price passes convincingly through a support or resistance zone. The keyword here is convincing, because we only want to enter when price passes through a significant support or resistance level with ease. The support and resistance breakout strategy involves the following steps. Step number 1. Identifying the price movement direction. If there is an uptrend, we should expect a resistance breakout. If there is a downtrend, we should expect a support breakout. Step number 2. As soon as the price makes a real break through the target level, we open a trade. In case of a resistance breakout, we buy an asset. In case of a support breakout, we sell it. Let's take a look at the examples where this strategy can be applied. The conservative way. Or support and resistance retest strategy. Instead of entering right on the break, wait for the price to make a pullback to the broken support or resistance level and enter after the price bounces. Here are the examples illustrating the strategy. Placing stop loss properly when using support and resistance trading strategies. Once again, take into account that support and resistance levels should be referred to as price zones, which sometimes appear to be quite blurry. The price actively interacts with these areas, so stop loss should be placed outside of these zones. Auto support and resistance indicator. The indicator will spot support and resistance levels with which the price has actively interacted before. The support and resistance indicator aims to assist a trader in their everyday trading. It automatically spots the levels the price has actively interacted with before and draws them on the MT4 chart as rectangular areas. The price range, or height, of support or resistance areas depends on the spread between price highs and lows that the level goes through. Resistance levels are marked in orange and support levels are marked in blue. The support and resistance indicator does not repaint. However, the occurrence of new highs or lows within the range of a specific support resistance can expand its height. The best time frames to work with are 15-minute, 30-minute, and 1-hour time frame chart. Settings. The window of the indicator's settings has several tabs. As a rule, you shouldn't have any difficulties with them. So we'll analyze only the settings displayed on the Inputs tab. Level Settings block. Level vertical width is in charge of the maximum height of support and resistance areas. By default, this parameter is set to 5.0. The higher the value, the greater the price range covered by the drawn support and resistance levels. Levels frequency on chart determines the frequency of levels displayed on the MT4 graph. The default value of the parameter is normal. You can change it to more if necessary. In this case, the indicator will show more levels within a similar price range. You can also select the less option. In this case, only the most significant support and resistance areas will be displayed on the chart. Display Options block. Levels display period sets up the depth of the history used to draw support and resistance levels. Its default value is medium. In this case, the levels are drawn within the time interval, which is no longer than 600 candlesticks on the current time frame. You can also choose the history depth of 300 bars, levels display period equals short, or 1200 bars, levels display period equals long, to draw levels. Minimum touches to show. By default, its value is set to 5. This means that the indicator will draw only those support and resistance areas with which the price interacted 5 times or more. Show touches count. This parameter has only 2 values, yes and no. If set to yes, the number of price interactions with the level, the weight of the level, is displayed next to it. If set to no, this information is not displayed. Show touches on click displays the price interactions with the level when you click the number. This option allows you to track where and when the price touched support or resistance level. If necessary, the option can be disabled. To do this, set show touches on click to no. Projection length sets the length of dashed line, projection, and bars. Color options block. Color scheme. By default, the indicator automatically detects the color scheme depending on the chart background. If necessary, select the desired color scheme from the list. This should be simple enough. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. See you next time.